Well, this morning, the Bank of Canada came out with its decision on the key rate. We're going to talk to Matthew Pott from Grain Perspectives. He's joining us right now on the phone. Matt, how's it going?
Good, Shaun. How are you doing today?
Well, I'm doing pretty good. I think maybe better than the Canadian economy. I don't know, Matt. What did you take from this expected decision today to leave rates unchanged? But like normal, we kind of have an idea what the Bank of Canada is going to do, but everybody really focuses on the commentary. What did you take out of that commentary?
Yeah, the statement's interesting because if you were highlighting everything that is, I guess you could say, kind of suggesting that interest rate hikes shouldn't be as aggressive or should not continue to rise, your whole statement or the majority of it would highlight with red when you talk about the global economy conditions, crude prices and what that's meaning. But at the end of the day, the statement still concludes with the fact that we should still expect to move towards neutral rate eventually, which is between 2.5 and 3.5%. Right now we're at 1.75, and that's what we held today. So overall, an interesting statement.
Yeah. So do you think they're still sticking to this? We're two more rate hikes in 2019. I think
you're betting on 1 to 2 more rate hikes in 2019 right now. 2019's growth in itself actually was lowered in this statement by 0.4% to 1.7% from the previous 2.1% in October. So we're expecting the economy to slow down a little bit. So if inflation isn't as big of a worry, does the bank need to be as aggressive and as quick to reach that neutral rate? So when you read through the statement, there's all these warning signs, but the end goal that the bank has in front puts in front of you is the exact same as the previous statements, and the fact that we're probably going to have to move to that rate eventually.
Well, and this is also happening in parallel with the U.S. Federal Reserve getting a little bit more dovish on its own interest rate intentions for 2019 as well. Canada is an exporting nation, and so we really do require or rely on a relatively strong global economy. And, I think right now, Matt, a lot of people are really concerned about what is going to be the story for the global economy in 2019.
And that depends a lot on what happens with trade. And that's one of the big things that this statement says from an outside of or domestic economic data is what is the global economy going to do with all these trade uncertainties, and how does that resolve? China and the U.S., when your two biggest economies are still at a trade war, they're on some sort of truce right now, but they're still at the bargaining table. There's lots of risk from the global economy standpoint too, and from an exporting nation that relies on the global economy as much as what we do, that's definitely something that's going to kind of add just another element of uncertainty to the statement that we saw today.
Yeah, and I thought I saw, when I was watching BNN throughout the day, I thought I saw as well that the Bank of Canada did make some comments specifically about concerns about maybe the U.S. economy itself slowing in this year.
That's correct. It did mention a little bit about the U.S. kind of in between the whole global discussion. It just said that in particular, growth in the United States remains solid, but is expected to slow at a more sustainable pace through 2019. So, yeah, the U.S. economy, but that's nothing new. That's not new information. I think the majority of the market's already expecting that and already pricing that in right now.
Okay, Matt, so let's talk about the Canadian dollar, because these things are all tied together. If we talk about the health of the Canadian economy, exports, you can't avoid the discussion about the dollar. In the last year, we've seen the dollar drop about 5.5%. Last 3 months, down 1.8%. Last month, it's ticked up 1%. What does all of this mean for the Canadian dollar that sits, roughly right now about 75.6?
I think the Canadian dollar right now, we kind of bounced off the lows, and crude's always going to make some sort of a difference on the Canadian dollar, but possibly not as much as what it would have like 2-3 years ago right now. But we're kind of dealing with a stalemate, possibly between what the Federal Reserve and the Bank of Canada are both going to do as far as interest rates are concerned. So those interest rate differentials this year are going to be quite interesting to follow. Why interest rate differentials matter is because at the end of the day, whoever pays more or whoever is expected to pay more is definitely the currency that will have higher demand. But this is happening while we have all these global uncertainties happening and the money flowing inside and out of who knows where. Every time some sort of little every time one little scare comes along.
Yeah, like you said, we have bounced off the lows. It's been a relatively good week. We've gained over 2 cents on the dollar. You mentioned oil prices. Right now we're just above, I believe, like $50 on the WTI. We had Saudi Arabia coming out with some comments just in the new year in the first couple of days, talking about an $80 barrel of oil. That's a $30 increase possibly here, Matt, in this year. Will we see the Canadian dollar attach itself a little bit to that if that happens, or are we going to see some of the same detachment we saw in 2018?
Well, if we start getting up to that high of crude values, that means the global economy isn't as big of a worry anymore if crude's worth that much. And so the Canadian dollar in itself should see some sort of appreciation based on that, especially after Polad's remarks today or the statement today, right?
Yeah.
So I think when it comes down to it, I'm still right now, I'm still watching the interest rates closely because I think the difference between what the U.S. and what Canada does on interest rates is going to mean a lot. And who knows what's going to happen with that trade agreement, because that's the big elephant in the room right now is those China and U.S. trade agreements and what that means. I mean, those are the two biggest global economies, right?
Yeah. Well, and Matt, honestly, if you look at the Canadian dollar and you look at like a 5-year chart, in all honesty, since June of 2015, we have virtually floated between 70 and 80 the entire time. There was a brief push above 80 cents back in September of 17, but for the most part, we just kind of floated in between 70 and 80 anyways.
Yeah, and that probably won't change unless we see a big change in the value of the U.S. dollar. And when will that happen? I'm not 100% sure. It's like you know that it's going to happen eventually, that everything's going to have a dramatic shift. But when that will happen is the big question.
Yeah, good points. Hey, yesterday we had John Dreger from FarmLink on, and we covered a lot of different commodities. One of the commodities we didn't talk about was corn. I know you follow it closely. What are your thoughts right now in Q1 here for the corn future? Corn
future market's a really interesting one because how many acres are going to end up in the ground in 2019 here? And a lot of that's going to depend on what happens with the trade agreement as well. And you're also hearing some rumors going around or rumblings going around that China might actually come to Canada to buy some, not to Canada, to the U.S. to buy some corn, which would be another positive thing for the corn story and the soybean story alike, right? But I think when it comes down to it, we're still at a high supply environment one way or another. And when you're looking into 2019 prices, keep an eye on where our looney's trading on too. Ontario cash prices here for 2019 and 2020 were trading to an elevator around $5 for both those harvest years already. And it's very rarely can we get a chance to lock in some perceived profit at that time. And 2020, we can't guarantee that $5 would profit because who knows where, expenses are going to be by that point. How much things can change, such as equipment sales and all that. We've seen that continually already due to tariffs and et cetera. But the corn picture, it looks pretty good here right now as far as locking in some sales into the future years. And I think that's something that we want to keep an eye out for because who knows how many acres will go in the ground and how quickly these political stories can change the things.
Yeah, all of this talk about China and the U.S. and potential trade, that you think that would have that is going to have an impact on the acre picture. So it does make the marketing decision really kind of risky and edgy and you got to hedge your bets a little bit.
Yeah, and that's what I like to say. And with so many moving parts going on, I think we all feel good grabbing some profit when we have a chance to grab some profit in this type of market, right? Because the advantage of grabbing profit now or next week or whenever the cookie is given to you is that you don't have to be as big of a panic worry like we saw last year with commodities. Especially soybeans, when we saw collapsed. I can't even remember off the top of my head how quickly we collapsed in June, July, Sean, over $1.50 a bushel, right?
Yeah.
So let you float through some of those times a little easier if you, lock in profit, I think, is the way that we want to work in 2019 and focus on looking at your books at all times.
Well, I do think that what we can really hope for in 2018 is we move past some of these trade issues that have impacted the commodity market so much. We can focus a little bit more on some of the the fundamentals that really should be driving the market, not necessarily whether or not a trade deal is going to happen. That's what I'm hoping for 2018. We'll see if I get my wish. I don't know, Matt. Hey, Matt, thanks a lot for joining me. Great stuff, great information. I really do appreciate it.
Thanks, Sean.
So please go to grainperspectives.com and check out Matt's offering. Puts together a great daily email on what's going on in the markets. Check it out at grainperspectives.com.